Since SoFi decided to go public this year, I've published many videos explaining why SoFi is the leading one-stop shop online bank. I've explained the benefits and the advantages of SoFi's vertical integration of centralized services. I've told you that they own Galileo, the leading fintech software infrastructure provider, which powers the likes of other leading fintechs like Dave, Revolut, TransferWise, Chime, and Robinhood, to name a tiny fraction of their impressive customer list. With that acquisition of Galileo, at least 90% of all online bank accounts now run through SoFi's platform. I've expressed that SoFi is unmatched in these ways, and that's why I bought thousands more of SoFi stock at $17 per share. That's why I pulled together all of the funds that I could find to buy the $16 and $15 dips. That's why I did whatever I could to catch what others called a falling knife. Perhaps those others are fools for selling, or maybe I was wrong. Maybe I was too excited about the hyper growth rates of the company across the board. Even as the company continues to grow at those high rates, perhaps I was still wrong to think it matters. Maybe buying all those SoFi shares at $16, what I consider to be a great long-term discount, was naive. Maybe. I should have realized investors would be misguided enough to drive this stock down to low 14s and even 13s, even as it performed better than expected across all but one of its business units. I should have realized that most people would fail to understand the long-term picture of a company like SoFi. I should have remembered that most people are quick to sell at the slightest sign of short-term weakness, especially when they misread that sign. I should have remembered that it takes a while for the crowd to catch on to the best long-term opportunities on the market. Perhaps I should have waited to load up on thousands more shares of SoFi now instead of doing it at $16 and $15, right? Maybe if I was looking for a quick flip, that might have been my calculus. However, this is where I remind myself, as well as you, the investor watching, waiting for me to say it ain't so, that we are all long-term investors. We are growth investors. Heck, we're even value investors. We find great companies with great management and great long-term potential for great value appreciation, and we buy them at great short-term discounts. And we wait. The market goes down, and we wait. The market goes up, and we wait. The market goes sideways, and we wait. And we wait, and we wait. We keep buying and holding through all the emotions. If the price falls, we take advantage of the greater short-term discounts. As the price rises, we take advantage of the short-term discounts so long as they remain. And we wait. They sell, we wait. So long as our long-term thesis remains supported by the company's execution of their revenue growth strategy, we wait. It may take years, but if we wait long enough, we will benefit from the appreciation of the value of this asset. I've done the math. In the next 5 years, I expect SoFi stock to at least 4x in value. It could very well 6x from here. It's hard to say where to go from there, but my bet is on up, and exponentially so. SoFi is the leading and perhaps one and only true one-stop shop online bank. SoFi is the underlying infrastructure of most other online banks you've heard of and probably tried. Even if you never use SoFi, you will use SoFi's technology and SoFi will be paid. As a result of its vertical integration of centralized services, SoFi has increasingly lower customer acquisition cost. This translates to increasingly cheaper revenue growth. And if you haven't heard, SoFi has a world-class leadership team led by the great Anthony Noto of Goldman Sachs, Twitter, and the NFL. In due time, SoFi will be everywhere. We've discussed all of this and more on this channel. The underlying business of SoFi is one of the best long-term investment opportunities on the market today. So, was I wrong to buy thousands of shares of SoFi ahead of the recent declines instead of waiting to maybe get them at an even greater discount? By now, you know the answer to that. You know from the savvy minds of Warren Buffett and other all-time great investors that timing the market is a fool's game. You know that time in the market beats timing the market. Instead of trying to time the direction the stock would take from week to week, we just buy and we hold. We dollar cost average up and we dollar cost average down. We thank the fools for the discounts. We trust our management team and our own judgment. And we wait. Thank you for watching this video. If you enjoyed it, do me a big favor and like the video below, subscribe to the channel, hit the notification bell, comment your thoughts on SoFi and whether or not you're buying these dips and how long you plan to hold. Is SoFi living up to your expectations? How long have you been invested? How long can you wait? Remember, it's all about waiting. We buy, we hold, and we wait for our long-term thesis to play out. I will be investing in this company for the long term, and I hope that if you are an investor out there, you're thinking and focusing on the long term as well. Even if you aren't investing in SoFi, for your own stocks, for your own companies, your own businesses, play long-term games, and you will have better chances at success in the stock market as well as in all of your life, all of your endeavors. That's how the greatest investors, the most successful people in our lifetime, in all of time, have realized their greatest feats over the long term. Success is not built overnight. It takes a lot of time and lots of ups and downs. So if you're investing in SoFi for the short term, you might be frustrated right now that the stock has gone all the way down to the low 13s and it may even go lower in the short term. And if you sell now and you bought at $17, $18, $20 per share, you might lose a lot of money. But if you don't sell, if you hold on for the long term and watch the thesis play out, give the team, the management team, enough time to play out their strategy and continue to grow this business as they are, growing the membership, growing the product usage, increasing the NPS, the customer loyalty, increasing the lifetime value of customers by decreasing the customer acquisition cost throughout their funnel because they're vertically integrated and they centralize services. And of course, because no matter which banks, online banks customers use, most likely SoFi will be behind it through Galileo, which is one of the biggest reasons why I'm so bullish on this company, which is one of the biggest reasons that I plan to hold this for the long term and continue to have it as my largest position as it is now, unless something big changes in the future that I do not foresee. This company is gold, and I like gold, and it takes a long time to mine gold, which is what makes it valuable. So let's give it time, and in a couple years, a few years, 5, 10 years, we will get our gold. I will be here along the way, sharing my thoughts on the company's progression. I was a big fan of what they did in Q2 of 2021. They have continued to grow the company across the board. People are worried about the EPS, earning per share. That doesn't matter to growth companies. What matters to growth companies is growing their revenues over time. And SoFi is doing that at a rapid pace. They continue to grow rapidly. All segments of the business besides student loans, because of the student loan repayment halt on the federal level, all SoFi's businesses besides the student loans are continuing to grow rapidly. They're growing faster than they expected, which is why they were able to maintain the guidance and not cut it. But they weren't able to increase it, which is fine. But everyone wants to compare them to other companies that are nowhere like SoFi. They might do one thing that SoFi does, like Upstart with lending, but SoFi does so many more things and they do it all well, and they're growing the business. They're climbing multiple mountains while other businesses climb one, and SoFi, as they approach the tops of those mountains, will most likely be better off than the competition and all of the misguided comps that people are making today. That's why I continue to hold. So I will be here for the long term, and I will continue to bring you these videos. And of course, that will be due to our patrons at patreon.boacademy.org who support this channel financially, help us keep going, help me brainstorm new video ideas to share with all of you. So if you would like to support the channel financially, then join us over at patreon.boacademy.org. And of course, you'll get access to our Discord channel where we discuss the stock market in real time every day to share news, rumors, and new investment ideas so that we can all do our own research and then come back together and collaborate. And you will get more access to me and get direct answers to your investing questions. And on down days like today and this past week and months, you will have a community to support you and help you reason about your choices before you panic and sell and lose all of your money, all of your gains because of short-term issues, short-term movements in the market. So that's the value of becoming a patron, and of course you will help the channel continue to produce more videos for everyone out there. So if you're interested in all of that, I hope to see you over at patreon.boacademy.org. I'm Lincoln with bullish.org. Thank you again and have a great day.